Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. My dear friends, this is the 4 hour chart of DXY. During the US session on Friday, we saw massive correction on DXY. DXY made a high of 104.65, and after that we saw massive correction. This is the 4 hour chart, and you can see these two massive red candles. Ultimately, DXY closed at 103.88. So the Monday, the market opening will be very important so that we can understand in which direction DXY will move again. Whether this is just a correction so that it can go up again, or this is a trend reversal on DXY again. So this will be very important for us. So Monday and Tuesday will be very important. And if we look at the news, then you can see dollar slips as market eyes upcoming Fed action. And when is the Fed action? Fed action is on Thursday, 23rd Feb. You can see FOMC meeting minutes. So maybe we will see a silent market on Wednesday, Thursday. Okay, then the market will be very volatile. Okay, so please be careful with your stop losses. Okay, so let's have a look at the chart of DXY again, because you need to know where are the next important levels. So after the market opening, if market starts falling or if the selling continues on Monday as well, the next support on DXY will be 103.62 or 103.60. This is the first support on DXY. If market takes support, well and good, you will see market bouncing from there. If not a complete trend reversal, at least you'll see a temporary bounce. And if the selling pressure is too high, then obviously 103.62 will not be able to hold the market. In that case, the next support will be around 103.38. This is the second support. So these two are the supports on the chart of DXY right now. And if we see market going up again, then well and good, probably DXY will continue the uptrend, and this is just a part of the correction. Okay, and as I already mentioned, the next big resistance on the chart of DXY is around 105.50. Okay, but that level is quite far away right now. Okay, now let's talk about the chart of gold. To be honest, we do not have any strong support or resistance on the chart of gold right now. The strong levels are far away. For example, the strongest support on the gold is around 1790. Is around 1790 to 1785. Those who have been trading on gold for more than a year, you remember this level. 1790 was a big level once upon a time. So 1790 is back in the scene again. So in case gold starts falling, then 1790 to 85 is the level where we can expect a big bounce. And if not a trend reversal, at least we can expect a bounce of 80 to 100 pips. After all, this is 1790. But right now gold is trading at 1842, quite far away. So as a result, we need to focus mostly on this part of the chart. So first of all, let's consider the level of 1890 from where the market showed recovery. 1819 is the first or the only support on the chart of gold right now. Keep in mind, this is not a strong support. Okay, this is just a previous low made by the market, but the market structure is still the same. Though market has shown good recovery on Friday, but we cannot deny that the market structure, the ongoing market structure, is very much bearish. So if gold starts falling again, 1819 will not be able to hold the market. So on Monday, if you see gold coming down, then at first your job will be to observe the volatility of the market. Volatility always plays a big role. If you see that market is coming down with candles like this, it means that market has high sell volume. In that case, the level of 1819, 1820 may not work. Okay, and you need to skip. And on the other hand, if market acts normally, because usually during the first half of Monday we do not get to see much volatility. If you see market coming down with small candles, then you can expect uh, the level of 1819 to 1820 to act as the support. So volatility will play a big role. If market is less volatile, you can expect the market to give you a bounce of 40-50 pips. If the market is too volatile, then market will break the level and market will go down. And if you see market is extremely volatile and market is going down with big red candles, then you may get a selling opportunity below 1820, 1819 or 1820 level as well. Okay. Again, I'm repeating, 1819 or 1820 is not a proper support. This is just a last low, previous low made by the market. So volatility will decide whether we should be going for a buy position or not. If you see market taking support, then only go for a buy. So volatility. Okay, so what should be the ideal time frame? You can obviously watch the time frame of 1 hour. You can also watch the 15 minutes time frame as well. Okay. On the other hand, the another level will be 1853. 1850, why 1853? Because 1853 is the next resistance. 1853 is also not a very strong resistance because right now the market is falling and we do not have any proper static support resistance. If you have the decent idea about support resistance, then you must know that static support resistances are much stronger in comparison to dynamic support resistances. And right now in this falling market, in this trending market especially, we do not have any static support resistance. So as a result, all the levels are not very trustworthy. So 1853 is a resistance, next resistance on the chart of gold if market starts going after the market opening. So after the market opening, if you see market going up, then observe the market on 1853. If the market acts normally like a typical Monday market, then obviously you can expect the market to face some selling pressure around this area. You don't need to trade on the 4 hours chart. 4 hours time frame is quite slow. So if you see market reversing from 1853 level, if you see market forming a shooting star on hourly time frame, if you see market showing good price rejection from above, you can definitely go for a sell position. At least you can expect a profit of 40, 45, 50 pips. And if there's volume and market shows good amount of selling, then obviously you can expect a higher profit like 80, 100 pips as well. Okay, so 1853 is the next resistance. But again, I'm repeating, this is not a very strong resistance. Okay, just like the support. Okay, these two are the levels right now we have on the chart of gold, but they are not that trustworthy. And the resistance, okay, and the next resistance is around 1898 to 1903 that we all know. Okay, that level is quite far away. I don't think so we need to discuss about this level right now, but yes, this level is still present in the market in comparison to 1843, 1898 to 1903 is a much stronger level. So on the chart of gold right now, we have two strong levels. One is strong support, one is strong resistance. This is the strong resistance and this is the strong support, but sadly those two levels are quite far away from the current market price. So as a result, we are mostly focused on this particular portion of the chart. So we have 1819 to 1820 as the support, and this is not a very strong support. So if the volatility is low, we can look for a buy position. If the volatility is high, and if market breaks the level, we can look for a sell position as well. We may not see a straight short sell, but at least we can expect some profit. Okay, on the other hand, if market goes up after the market opening, 1853 is the level from where we can expect the market to reverse. And if you're wondering why 1853, let me show you. 1853 is the Fibonacci 23.6% retracement level. Sorry, I made a mistake here. This is not 1890 to 1903. Okay, 1890 to 1903 is somewhere around here. Okay, this is the level of 1870. 1870 is the second support. 1870, 1868 is the second support, a second resistance here. Okay, so the strong one is quite far away. Okay, the strong one is quite far away, but yes, this also looks like more or less a good level, isn't it? So let's wait and watch. Okay, I'll be coming on Monday as well. Okay, yeah, I have an announcement to make that I will be out of station for a couple of days, so my videos may not be regular next week, or I may not be able to update or upload any videos at all by next week. So anyway, this is my lesson. I can be wrong as well, so please follow proper risk management. As I always say, do not gamble with your hard-earned money. Bye bye, take care.